The iPhone is only 3 years old. Instagram doesn't even exist yet. And on a quiet online forum for computer enthusiasts, people are talking about something strange, a brand new form of digital money called Bitcoin. At that time, one Bitcoin is worth less than a single penny. Hardly anyone takes it seriously. To most people, it's just a toy for programmers, a curious experiment with no real future. But imagine that you, out of curiosity, decided to take a leap of faith. You spent $100 on Bitcoin in 2010. What would that decision mean for you today? The numbers are almost unbelievable, but the story is about more than just money. It's about innovation, risk, and how one obscure idea reshaped the world. The early days Bitcoin was created in 2009 by the still mysterious Satoshi Nakamoto. It was designed to be a peer-to-peer currency, free from banks and governments, powered by blockchain technology that kept transactions transparent and decentralized. At first, nobody outside of tech forums cared. In 2010, Bitcoin made its first appearance in the real world when a Florida programmer named Laszlo Hanyecz traded 10,000 Bitcoins for 2 pizzas. At the time, those coins were worth about $40. Today, those same 10,000 Bitcoins would be worth hundreds of millions of dollars. That pizza purchase has become legendary, the first proof that Bitcoin could actually be used as money. If you had been watching closely in 2010 and bought $100 worth of Bitcoin, you would have gotten around 33,333 coins. That's because at the time, each Bitcoin cost about 3 cents. To put that into perspective, it cost less than a third of a penny. That tiny investment would later transform into a fortune that defies imagination. The journey of $100. But let's not jump to the ending yet. Owning Bitcoin in the early days was not for the faint of heart. In 2011, Bitcoin's price jumped from $1 to $31 before crashing back down to $2. That's a 90% collapse. If you had invested your $100, you might have been tempted to sell when it hit $1, turning your $100 into $33,000. For most people, that would have already been life-changing. But if you had sold then, you would have missed the billions still to come. In 2013, Bitcoin spiked again, this time breaking $1,000 for the first time. That same $100 investment was suddenly worth more than $33 million. Imagine logging into your digital wallet and seeing that number. For many early investors, the temptation to cash out was too strong, and who could blame them? But again, the story wasn't over. 2014 brought disaster when Mt. Gox, the largest Bitcoin exchange at the time, collapsed after losing hundreds of thousands of Bitcoins in a hack. The price crashed, the media declared Bitcoin dead, and many people swore it was over. But for those who held on, the journey continued. By 2017, Bitcoin reached nearly $20,000 per coin. At that point, your $100 in Bitcoin from 2010 would have been worth over $600 million. Then came another crash, and the doubters returned. Yet, Bitcoin survived. In 2021, it hit an all-time high of nearly $69,000. That means your 33,333 Bitcoins would have been worth over $2.3 billion. Even with the ups and downs, even with all the volatility, Bitcoin became one of the most profitable investments in human history. The reality of holding. Of course, this scenario assumes one thing, that you never sold. And that's where the story gets complicated. Very few people who bought Bitcoin early actually held onto it all the way through. Human psychology makes that almost impossible. Imagine buying at a fraction of a penny and then seeing your investment grow to $1,000, then $10,000, then millions. Most people would cash out long before billions entered the picture. And then there's the issue of lost coins. Bitcoin is stored in digital wallets protected by private keys, and if you lose access to those keys, your coins are gone forever. There are stories of early adopters throwing away hard drives that today would hold millions of dollars worth of Bitcoin. In fact, experts estimate that about 20% of all Bitcoin is permanently lost, vanished into the digital ether, never to be recovered. So while the math says your $100 could be worth billions today, the reality is much messier. The only people who became Bitcoin billionaires are those who had the vision to buy early, the conviction to hold, and the luck to avoid mistakes. The big picture. But let's zoom out. This isn't just a story about one investment. It's about how Bitcoin changed the way we think about money. In 2010, the idea of digital currency seemed laughable. Today, Bitcoin is recognized worldwide as a legitimate asset class. Major corporations like Tesla, Square, and MicroStrategy have invested billions in Bitcoin. Entire nations like El Salvador have made it legal tender. And Wall Street, which once dismissed it as a fad, now offers Bitcoin ETFs and futures contracts. That $100 investment wouldn't just have made you rich, it would have put you at the heart of a financial revolution. Bitcoin introduced the concept of decentralized finance, inspiring the rise of Ethereum, altcoins, NFTs, and DeFi platforms. The $100 what if isn't just about money. It's about how early believers helped launch an entirely new financial system. The risk factor. Of course, we can't ignore the risks. Bitcoin has been declared dead by the media over 400 times. Governments have tried to regulate or ban it. Hackers have stolen millions from exchanges. Volatility remains extreme. Bitcoin can lose 50% of its value in a matter of months. If you had invested in 2010, you would have needed nerves of steel to endure the crashes and scandals. And let's not forget, in 2010, $100 wasn't nothing. For many people, it was too much to risk on a weird internet experiment. That's why the what-if scenario is fun to imagine but unrealistic for most. Investing in something so radical takes both courage and vision. Opportunity cost. It's also worth thinking about opportunity cost. In 2010, if you had $100 to invest, you might have put it into Apple or Amazon stock instead. Those investments also would have grown massively. Apple, for instance, has grown over 3,000% since then. But nothing in modern history matches Bitcoin's growth. From less than a penny to tens of thousands of dollars, Bitcoin outperformed every traditional asset, every stock, and every commodity. The human stories behind the numbers are real human stories. Some early Bitcoin adopters became billionaires and changed their lives forever. Others lost everything to hacks or poor security. Some sold too early and spent years regretting it. There are tales of people discovering old laptops with Bitcoin wallets worth millions, and others searching landfills for lost hard drives that could make them rich. The what if isn't just about wealth, it's about chance, timing, and the unpredictability of human decisions. Lessons learned. So what lessons can we take from this story? The first is that innovation often looks crazy at the beginning. Bitcoin was ridiculed, dismissed, and attacked, but it still changed the world. The second is that patience can be more valuable than brilliance. Holding on to an investment through volatility is incredibly difficult, but often it's the only way to reap the full reward. And the third lesson is that opportunities are still out there. Bitcoin may have been the big one, but new technologies, AI, biotech, clean energy, Web3, could offer the same kind of explosive growth for those willing to take risks. So what if you had invested $100 in Bitcoin in 2010? On paper, you'd be a billionaire today. But the real answer is more complicated. The truth is, most people would have sold too soon, lost access, or never believed enough to hold through the chaos. The story isn't just about one person's hypothetical fortune, it's about how a radical idea changed the world of finance forever. The real takeaway is this: the future is always full of opportunities that look small, weird, or even laughable at the start. Bitcoin teaches us that sometimes the biggest changes come from the riskiest bets, and the next Bitcoin moment might already be out there, waiting for someone to see it before everyone else does. Because one day, years from now, people will look back and ask the same question about some new technology. What if I had invested $100?